crashes in the market can be crushing. You see the gains that have been building up slowly over time, sometimes years, disappear in a matter of weeks. You know what they say? Bulls climb up the stairs, but the bears take a lift down or jump out of the window. Maybe you've even witnessed this yourself. So for example, from its all-time highs, Bitcoin fell from 67,000 to 40,000 and more, 30,000 now, so around 50% in a matter of weeks. It came from 30,000, then to 60,000, then 30,000 again, then 67,000, fell back down to 30,000, settled at 41, now back down to 31,000. And people get upset to see their money falling so much, even though they're still in profit overall. And I find that interesting. Instead of focusing on the gains, they focus on their losses, even though, technically speaking, it's not a loss. Now, I'm going to show you something. It doesn't have to be this way. While it's a truism to say that when markets go down, you are not as profitable as you were before, but it's equally a fact that fortunes are made after the fall when markets return. In fact, we've made extraordinary gains immediately after a fall. While most people are suffering, we're celebrating. And if that seems difficult or impossible or even unlikely, keep watching and I will prove to you that you can achieve similar results. First, let's get your mindset right about what a crisis actually means. Is a crisis a crisis? Or could it be an opportunity? And if you start thinking about a crisis being an opportunity, then everything changes. It all has to do with 3 key trading habits that most people, they just don't know about, yet alone do. So here's success habit number 1. Do the opposite of everyone else. Now the technical word for this is being a contrarian. When people go left, you go right. While this is simple to do, it's not easy because we're wired to do what everyone else does and follow the crowd. And when the market is going higher and you don't get in, you just see gains you could have had but aren't having and you feel like you've missed out. And if you know others who are in and making those profits, it feels even worse. I get that, of course. However, would you rather buy at a higher price or at a lower price? Everyone who gets in as it goes up is buying at a higher price, right? Personally, I like to buy a pair of jeans that I want worth, let's say, £50 a little later in the sales at £30. That's a huge discount just for being patient. The difference is that I know when the sale is going to be in the shop, but I don't know when it will be in the markets, right? I do know it's coming, I just don't know when. So, do you like buying at a discount or at a full or even higher price? Success habit number 2. Remember that what goes up must at some stage come down. You see, when something goes up, we as seasoned investors assume it continues. The saying is, the trend is your friend. Now, in my experience, and I'm talking 22 years of trading and investing, the final part of an overextended rally tends to draw in the greedy, least informed retail investors. And that, unfortunately, tends to lead to big losses for these individuals. Imagine knowing when to spot these key moments in order to avoid them. Now, this can mean occasionally watching from the sidelines as that exciting rally continues. Again, simple, but not easy. But that is what successful investors learn to do. Why? Because eventually the stocks that go up too much, they will reverse. The reverse is also true. When you are down in your positions, don't panic sell. That's what fearful, least informed retail investors do. Hold on to your stocks to take advantage of the recovery, and if you really believe in them from a fundamental point of view, you can even add to that position, lowering your average price and really take advantage of the recovery. Success habit number 3. Don't take the easy trade. Take the uncomfortable one. It's not easy right now. Inflation is really making itself felt, and due to the war in Ukraine, prices, especially energy prices, they are soaring. And some stocks, which have seen massive gains, have come all the way back down. Some of them are uncomfortably down. It doesn't seem like an obvious time to buy, but the most uncomfortable times to enter the market often end up being the most profitable as well. Not easy to do when you don't want to, I know. But remember, the cheaper you enter, the less you pay. The sooner you get into profit and the more money you make as it goes back up. So what's the key here? What's the one thing that all the above have in common? The ability to control our emotions. Again, this is simple, but it's not easy because generally speaking, we aren't the most rational of beings, right? We tend to be emotional and irrational at times. Sometimes we're greedy, sometimes we're fearful, especially if we don't have a strategy with rules. We tend to be like a feather in the wind, tossed around the place and not in control. And that's the problem. Most people just don't have a strategy with precise rules on what to do in every scenario written as part of a trading plan. That's right, written out. It doesn't have to be long. It can just be a one-pager. It's definitely doable. So start writing down some of the rules of your strategy. And if you want to know more about ours, then join the I Am Insider. It's free. When you become an I Am Insider subscriber, you get exclusive access to our members area, which is full of training videos, books, resources, and much more. You'll receive various newsletters direct to your inbox every 2 weeks that contains what is going on in the market, our trading floor results, top crypto gainers and losers, and much more. So become an insider by signing up on investment-mastery.com/insider.